Have you ever had $100 in your pocket and wondered how to turn it into more? Maybe you've thought about how that $100 could grow into $1,000 or even $10,000. Well, you're in the right place. In this video, we'll talk about how to make the most out of your first $100 investment. Imagine putting that money to work for you instead of leaving it in a bank where it might barely grow. By the end of this video, you will know exactly how to invest your first $100 in a way that works for you. Why not just keep in the bank? Let's start by talking about why leaving that $100 in a savings account might not be the best idea. In most savings accounts, the interest rate is so low, about 0.05% per year, that your money barely grows. Over time, that means you would need hundreds or even thousands of years for your money to double. That's not ideal if you want to see some real progress with your investment. So, what's the solution? You need to put that money to work. You can invest it in ways that suit your goals, interests, and risk tolerance. By doing so, you can start building wealth with that first $100. Let's dive into the different investment options available. Investing in individual stocks. One popular way to invest money is by purchasing individual stocks. When you buy stocks, you're essentially owning a small piece of a company. It's like becoming part owner of a business, even if it's just a tiny part. When investing in individual stocks, you have to consider three main factors: risk, reward, and difficulty. Stocks can be risky. The value of a stock can go up or down, and you never really know what's going to happen. Some companies can grow quickly and multiply their value, while others might suddenly drop in price. Because of this uncertainty, stocks carry a moderate amount of risk. If you're just starting out, it's important to be prepared for this volatility. The reward, however, can be huge if you choose the right stocks. If you pick a company that grows significantly, your investment can multiply. For instance, Tesla saw its stock price increase by 1,000% in a short time. However, it's important to know that the risk of losing money is also there. If you don't know what you're doing, it's easy to lose part or all of your investment. That's why many stock investors diversify, meaning they invest in multiple companies to spread out their risk. When it comes to difficulty, picking the right stock can be challenging, especially if you're a beginner. You'll need to research the companies you're interested in and monitor their progress over time. It's not a set-it-and-forget-it kind of investment. However, there are apps like Webull that make investing in individual stocks easier, even for beginners. Webull allows you to get started with just $100 and offers free stocks as a bonus. It's an excellent option for new investors. Investing in bonds, low risk, low reward. Bonds are another investment option, especially if you prefer something less risky. A bond is like a loan you give to a company or government, and in return, they promise to pay you back with interest. When you buy a bond, you're lending your money to the issuer, and they pay you a fixed rate of return over time. For example, you might invest in a bond that pays you 4% per year, but you need to hold it for 10 years. Bonds are generally considered very safe, which makes them an attractive option for people who don't want to take on too much risk. Because of their stability, I'd rate the risk of bonds a 10 out of 10, meaning they are low-risk investments. However, the reward isn't as high as other investments. Most bonds provide a return of about 3% to 4%, which means your money will grow slowly. Because of this, the reward score for bonds is a 2 out of 10. Bonds are especially good for older individuals or those who are close to retirement and need to preserve their capital without much fluctuation. Investing in bonds is easy. You don't need to actively manage your investment. Once you buy a bond, you just sit back and wait for the interest payments. Because of this ease, the difficulty rating is a 9 out of 10, making bonds an excellent choice for people who don't want to deal with the complexities of the stock market. Investing in yourself, starting your own business. Another exciting way to invest your $100 is by investing in yourself. This could mean starting your own business or learning a valuable skill. Many successful entrepreneurs started with just a small amount of money, and over time, they built successful businesses. Investing in yourself might include things like learning how to code or starting an online store. However, starting a business is risky. Many businesses fail, and it can take several tries to find the right business idea. On top of that, you'll probably need to invest more time and effort before you see any return. For this reason, investing in yourself is a moderate risk option with a score of 5 out of 10. The reward, however, can be huge. Starting your own business can lead to financial freedom and independence. The potential to earn a significant income is very high, which is why the reward score for this type of investment is 11 out of 10. Of course, this comes with a lot of hard work, but the upside is worth it for many people. The difficulty of starting a business is high. You need the right skills, mindset, and a lot of determination to succeed. It's not a get-rich-quick kind of investment. You'll have to put in a lot of effort, and it might take several months or even years to see real success. Because of this, the difficulty score is 7 out of 10. But if you're up for the challenge, investing in yourself can be one of the most rewarding paths to financial success. Investing in cryptocurrency. High risk, high reward. Cryptocurrency has become a popular investment option in recent years. Cryptocurrencies like Bitcoin, Ethereum, and others have shown massive growth, and many investors have seen large returns on their investments. However, cryptocurrency comes with a lot of risk. The market is volatile, and its future is uncertain. The risk involved in cryptocurrency is high. The price of digital currencies can swing wildly, and there's always the chance that a coin you invest in might lose value or even disappear entirely. Given the unpredictability of the market, I'd rate the risk of cryptocurrency as 7 out of 10. However, the reward is potentially massive. Some cryptocurrencies have seen increases of 1,000% or more, and the market is still growing. For this reason, cryptocurrency gets a reward score of 9 out of 10. Cryptocurrency isn't the easiest investment to understand, and it requires careful research. You need to learn about different coins, how the blockchain works, and which projects have the potential for long-term success. This makes cryptocurrency a bit more difficult, with a difficulty score of 6 out of 10. Still, if you're young and have a high risk tolerance, cryptocurrency could be a great addition to your portfolio. Day trading, fast and risky. Day trading is another investment option that involves buying and selling stocks within the same day. It's a fast-paced way to make money, but it comes with its own set of challenges. You'll need to be constantly watching the market and making quick decisions about when to buy and sell. The risk of day trading is extremely high. A lot of day traders end up losing money because the market can be unpredictable and it's hard to make consistent profits. The risk of day trading is 2 out of 10, one of the lowest scores on this list. However, the reward can be high. If you make the right moves at the right time, you could see big returns. I give the reward a score of 10 out of 10. Day trading is difficult, though. It requires emotional discipline, quick thinking, and a solid understanding of the stock market. You'll need to spend a lot of time learning the ins and outs of day trading. For this reason, the difficulty score is 8 out of 10. If you're looking for a more hands-on approach and are willing to take on a lot of risk, day trading could be an option, but it's not for the faint of heart. Investing in index funds, passive investing. Index funds are one of the best investment options for most people. They allow you to invest in a broad range of companies without having to pick individual stocks. Index funds are typically made up of large companies like those in the S&P 500, and they tend to grow steadily over time. The risk with index funds is low. Since you're investing in a wide range of companies, you're less likely to be affected by the poor performance of one individual stock. I'd rate the risk of index funds a 9 out of 10. The reward is also steady. Historically, index funds have delivered average returns of around 7% per year after inflation. Because of this consistent growth, the reward score is 7 out of 10. Index funds are easy to invest in. You don't need to spend time researching individual stocks or actively managing your portfolio. Once you invest in an index fund, it's pretty much a set-it-and-forget-it investment. The difficulty score here is 9 out of 10. If you want a simple, passive investment, index funds are an excellent option with minimal effort involved. Now, you have several options to consider for investing your first $100. From low-risk bonds to high-reward opportunities like stocks and cryptocurrency, there's something for everyone. The key is to choose the option that aligns with your goals, risk tolerance, and time frame. If you found this video helpful, make sure to like, share, and subscribe to the Scale Smarter YouTube channel. Don't forget to hit the notification bell so you never miss a new video that will help you make smarter decisions with your money. Also, comment below which investment option finds you best and why it's a good fit for you. Take action and start investing today.